We're going to continue figuring out our cash flow statement. For this, I'm in a new practice file called Cash Flows-Part 2. We're going to be down under cell A12. We're going to be bringing in our CapEx information. Now just remember, this is basically investments into fixed assets, and it's going to be available to us on our CapEx and depreciation schedule, which is on that sheet. So all I need to do is hit an equal sign in cell B13, and then I'm going to click on my CapEx and depreciation schedule, go to cell C7, which is actually where that amount is for year one, and link it in. Then, of course, I can make sure that I format it the way I want it to be formatted. So just to make sure that you can fix the format on the first one, and then when you drag that over, it's going to be fixed for the subsequent 3 years. Now, you may have noticed that I don't have anything in cell E, in this case 13, and that's okay because maybe we didn't have any investing activities for CapEx in that year. Now, we're going to go down. After you've calculated CapEx, you're actually going to be able to calculate a category called free cash flow. And free cash flow is basically going to be cash from operations minus any assets. So let's get this category typed in. And then to calculate this, I'm going to go over to cell B15, do an equal sign. I need to take my first year operating cash flow, and I'm going to subtract that from my CapEx, and that'll give me a total. And again, this is something that can be positive or negative depending on, what's been going on with the business. But then we'll copy this over, and then notice that I'm also going to make sure it's formatted as a currency in this case, which it is. Let's talk about the finishing activities inside our cash flow statement. I have a new practice file called Cash Flows-Part 3 open. Feel free to use it to follow along. Now you'll notice that down in cell A17 under the financing activities, we've set up 3 new categories. The first one is called debt repayment. This is, of course, cash that goes away, followed by net borrowings. This is an increase in our cash flow. And then you have NCF, which is our net cash flow from financing. Now let's start with our debt repayment. We're going to go ahead and click here. We need this to be a negative value, and it is going to come off the balance sheet. We'll link to it. So after we click, we'll hit the equal sign, go to our balance sheet, come down towards the bottom under our assumptions section. We're going to click in cell C43, our first year of debt payments, but also up in the formula bar, I'm going to go ahead and put a negative in front of that to make it negative when it comes over to my cash flow statement. Then, of course, I'll drag that over for years 1 through 4. I'll get filled in. Now for net borrowing, we're going to get that again off of our balance sheet. It's already there, so all I need to do is click in cell, in this case B19, do an equal sign, jump over to my balance sheet. You'll see that we actually don't have net borrowing for all the years, but we do have it for at least one. We're going to hit that enter key and then drag that formula over so that it gets brought over to the other cells. And then again, make sure that you have a similar format on all those cells so that you can see what it represents. And just remember that net borrowing represents any new cash that came into the balance sheet. Our next category is to calculate the net cash flow from financing. For this, we just need to total the 2 amounts above. So I am going to come in and put in a border so that we can see that this is a total. And then we're just going to go ahead and sum the 2 amounts in the cells above for debt repayment and also net borrowings. Once I have that total, then I can go ahead and just drag it over to the other cells, and we can see that it's all ready to go. The next thing we want to calculate is a category called net cash flow. So I'm going to come down and add this to the spreadsheet. It's not actually there right now. So just type it into about cell A22, and you can format it after it's typed if it doesn't automatically update. Now, basically what this is you're looking at the total cash that's come into your business or that's produced in that year. So what I'm going to do is do a sum function where I add up my free cash flow with, in this case, my NCF from financing. Now, this can be a negative amount because it's our first year in business, but then it can turn positive as more time goes by. It's time for our moment of truth. We need to now tie our cash flow statement to the balance sheet. For this, what we need to do is take our basic first year cash flow, and we're going to tie it to the balance sheet. So to do that, what I'd like you to do is go ahead and go to your balance sheet. And again, we're still trying to calculate our cash that's actually up in row 5. We're going to do an equal sign and get the previous year's, again, cash. And then we're going to add that, go back to our cash flow statement and get our net cash flow. That will give us, again, our cash flow for the balance sheet. This we're then going to copy over. Now, the really important thing at this point is you want to make sure that your balance sheet, again, balances. This is where we're going to come down to that balance check in row 33. And this is what gives everybody a heart attack if it doesn't work, to make sure that the balance check is 0. And this is going to mean that our, again, assets equal liabilities plus equity in every year. And this is the really important thing to check for. Now, at this point, you can go through and clear out any of this formatting that doesn't look right inside your balance sheet and your cash flow statement, because you're ready to go.